Investing 101, we are talking about the Fed and your money with Frank Devincentis, and he's a senior VP with Morgan Stanley here in Chicago. So happy to have you on the show.
Thank you for having me.
This is happening. It looks like the Fed will raise rates. So what does this mean to the average consumer?
So there's really two ways that you can think of it affecting the consumer. One is on the savings side. So your money markets, those accounts that really haven't been getting much of any interest rate, those are going to start to move up. So you might start to see a little bit more interest coming into those accounts. However, on the variable debt side, so this could be anything like credit card or auto loans, those interest rates are going to step up. So you might be paying a little bit more on your monthly payment for that debt.
Now the Fed moves very slowly with these hikes. Why is that?
Well, they don't want to shock the economy. They really want to telegraph their movements and make sure that the market is ready and prepared to handle whatever they may be putting out.
So now that we know that it's going to be a slow, incremental move and rates are going to change, what should people be doing with their money? How should they be investing?
Well, for sure, the investment needs to be based upon a long-term plan. However, there are a couple of things that you just want to make sure are in place. You know, one thing, take a look at your fixed income allocation. Any exposure to long bonds might start to suffer in a rising interest rate environment.
You're exactly right.
Yeah.
Some of the pros are saying to be in a 30-year bond is not a good place to be. What about a 10-year?
Yeah, 10-year bond, to own a 10-year bond, I would also say, again, it needs to speak to the plan, but you really do have to watch out for interest rate movements. As an example, the 30-year bond in the fourth quarter was down nearly 15% because of the interest rate movements.
How should we consider what's happening with the Fed and some of the policies that are coming out of the White House?
That's a great question, and one that they're trying to figure out as well.
A lot of question marks right now.
So for sure, the Fed is going to be looking at the fiscal actions that the White House is going to be taking. Those fiscal activities will either spurn growth, and at least that's what they're expecting, and the Fed, who wants to keep stability in prices, might respond, and this is one of the ways that they would respond, increasing that federal target.
Well, thank you for coming on the show. We appreciate you
Pleasure
here for Investing 101.
Thank you.